What's up, everybody? Nate here, and the Federal Reserve and Federal Reserve Chairman Jerome Powell just released their minute summary from their meeting in June, and this discusses all about their new monetary policy, and more importantly, it goes over how the Federal Reserve is planning on becoming a lot more restrictive in our economy. Basically, the Federal Reserve is going to restrict our economy with their monetary policy a lot more than what investors and experts were anticipating. And this signals a complete change from what the Federal Reserve was planning on doing from the start of this year to now. And with everything going on and the changes happening, I want to go over the Federal Reserve's complete full plan to fight inflation and get our economy back on track. I want to go over what they're going to do with their monetary policy, and I want to break down this brand new minutes report. So in this minutes report from the Federal Reserve, they basically said that a restrictive monetary policy is going to be appropriate going forward because inflation is way too high right now and it's not really coming down. So far in 2022, they have started their inflation battle. Back in March, they raised their benchmark interest rates by 0.25%, and in May, they raised them even more, and now they are going to raise them even more in July 2022. Now, they said on this minutes report that their goal is still to try to get inflation down to their target level of around 2%, but inflation right now in the US is around 8.6%, and a lot of investors and experts are saying that it's going to continue to go up for the foreseeable future. They said that they're going to continue to raise their interest rates until inflation comes down in the United States. So we could see an aggressive Fed for the foreseeable future. And during their next meeting, they said a 50 to 75 basis point hike would be appropriate. They also admitted that raising their interest rates could restrict our economy in general, bringing down demand so much in our economy that nobody can buy anything. And they said that the expectations for where inflation should be and the reality of what the Federal Reserve can do need to kind of match up in our economy. There was a really confusing period just before their last FOMC meeting in June 2022 because it looked like the Federal Reserve was only going to raise their benchmark interest rates by around 50 basis points or so. This is what Federal Reserve Chairman said, and when asked about raising them by 75 basis points or more, he said that was pretty much completely out of the question. But we then saw that they did raise their interest rates by 75 basis points, basically negating everything the Fed had said previously. That is really important for things like the stock market and markets in general because the expectations of what inflation is going to be and what the Federal Reserve is going to do and the reality of inflation have to match up in some way. So if the stock market continues to have surprises after surprises, well, then you're going to see the stock market drop because investors don't really know what to do with their money. They have no expectations to go off of. Now, what exactly is the Federal Reserve's plan with inflation in 2022? Well, they want to do three things. They want to achieve maximum employment, they also want to achieve price stability, and they want to bring inflation down to around 2%. Now, how exactly do they get there? Well, the first thing that they can do is start to raise their interest rates. Raising their interest rates basically eliminates a lot of demand in our economy, and it's the number one way the Federal Reserve battles inflation. You see, the Federal Reserve has sort of a balancing act with our economy. They have to bring in enough stimulus in our economy that things grow. So that involves printing money and keeping interest rates at a level to where people can still go out and spend, but they don't want to bring things down too low and they don't want to print way too much because if they do that, well, then there's going to be a lot of inflation. Money is going to be very easy to come by and it's going to be easily circulated. So they can't have that environment either. But the big problem with what we're seeing in 2022 is that over the last 2 years, there was a lot of money circulating around. Interest rates were at 0% for a very long time, and there was trillions of dollars being added to our economy. So people went out and spent this money, but then unemployment and prices got way out of whack because of it. So think of it this way. They could either open the floodgates by bringing interest rates down, making it so easy for people to go out and get a mortgage. They're going to save hundreds of dollars every single month, and by printing a whole bunch of money. Yeah, if they print a lot of that money, it's going to go to businesses, it's going to go to banks, and eventually it's going to trickle down to the American people, and people are going to go out and spend that money. That was a short-term fix that we're now figuring out is causing some long-term problems. Just a few weeks ago, many of the central banks, including the Central Bank of the United States, the Federal Reserve, got together and basically discussed their monetary policy. And the Federal Reserve basically said that we understand how much we don't really understand inflation at this point. And that has a lot of businesses and Americans worried because there's basically two ends of the the coin here. Right now, you have the Federal Reserve entering restrictive mode. So they are now raising their interest rates so high that it makes it really difficult for banks and Americans to get that money. You are now going to have to pay a whole lot more in your mortgage, and we're seeing mortgage interest rates go up across the board. And it's harder for people to spend on things like credit cards. So without the ability to go out and spend that money, well, demand is naturally going to come down. The Federal Reserve directly controls demand in this way, and they can make sure that a lot of that money isn't circulating, basically bringing inflation down. If none of that money is being spent, well, then prices and employment can basically become stable. But that is not going to happen without some pain, and Federal Reserve Chairman Jerome Powell understands this. He said that a recession is definitely not inevitable in 2022, and there could be a soft landing, but that doesn't mean that we aren't going to see some economic troubles because of the Federal Reserve raising their interest rates and eliminating demand. So that is one side. You have a restrictive Federal Reserve, you have monetary policy that is bringing down demand in our economy every single day. Businesses worry about that because it's like a huge domino effect on everything else. Americans can't afford just about anything, so it makes it a lot more difficult for them to go out and spend money, and if Americans aren't spending money, then our GDP is going to take a hit because 70% of our GDP growth is from consumer spending. If Americans aren't buying things from businesses, those businesses can't grow, which means they can't keep their current employees and they can't make products for Americans to buy. The Fed is right. There's going to be a lot of hurt that comes to our economy. There's going to be a lot of Americans who could ultimately lose their jobs. There's going to be a lot of Americans that can't really spend a lot of money for a long time. So all of your leisure and travel industries and any entertainment industries are going to get hit because Americans are going to think about their money a little more closely in 2022 and in 2023. They can't just go out and spend because money is kind of hard to come by right now. The same exact thing with businesses. Here over on YouTube, a lot of sponsors are starting to pull out, affiliates are starting to pull out, and there is a lot of YouTubers talking that ad revenue is slowly starting to drop. I've seen that on this channel just myself. A lot of your big YouTubers in general are saying that these businesses that were pouring hundreds of millions, if not billions of dollars into YouTube ads are now pulling their money out. They don't have that money for marketing, and they're basically just trying to stay afloat. They're putting their money into other things, and other businesses are doing the exact same thing. This is a systemic problem, and the stock market is directly affected by this because businesses trade on there, and they trade for the future. They're trading on the expectation that the United States economy is going to be very well, and right now it doesn't look like the economy is going to be very well in the near to just near distant future. So that is one pathway for the Federal Reserve, and the one that they're currently going down. They have an obligation to try to bring down inflation as fast as possible, even if it restricts our economy. They are an independent government agency, although a lot of the times it doesn't seem like they are independent from the federal government, but I guess technically they are. It is their job to make sure that the value of the dollar stays stable and that it stays really strong on the global stage. And if inflation keeps going up, well, then the dollar is losing a whole lot of value. Other countries that use this as their reserve currency, because the dollar is the reserve currency of the world, are going to trade out the US dollar, and that's just going to bring down the value even more, and it's going to hurt the United States in the long run. So the Federal Reserve cannot let that happen, and they can't let inflation continue to run rampant throughout our economy and devaluing the dollar. And the Federal Reserve is most worried about right now is that even though they're raising their interest rates and bringing down demand and making their monetary policy very restrictive, that might not even bring down inflation. A lot of the inflation problems that we're facing are from supply chain issues, from the war between Russia and Ukraine and China lockdowns. The Fed doesn't have any control over our supply chain, so in the short term, they're probably going to have to get even more aggressive on inflation by raising their interest rates way more than they normally would, meaning we're gonna have some long-term problems. So what you have to understand about their plan is that they don't care if a recession happens in the United States. They understand that if they don't bring inflation down right now, then a whole bunch of dominoes are going to fall, from the value of our dollar dropping to businesses starting to tank and Americans not being able to buy anything. And it creates a whole nother problem because as prices go up, Americans need to make a whole lot more, but businesses can't really produce more, so they're not really going to be able to pay Americans. If they do, well, then that just makes inflation go up even more because people now have a whole lot more money to spend, so they're going to naturally go out and spend that money, and the entire cycle just basically repeats on and on until now your value of the currency is basically nothing. Now, the other side of this coin is, well, what if the Federal Reserve starts to decrease their interest rates again? What if they start to bring more stimulus back into our economy and print a whole lot more money? That way, we would avoid a recession. If they printed more money, well, then you would see a boom in our economy, just like you did in 2020 and in 2021. It would be really easy for people to go out and spend money. It would be really easy for businesses to take on debt and grow. All that would do is basically prolong the inevitable, though, because that would just keep inflation really high. People need more money because you keep pouring more money into the economy, so now people need a whole lot more. The value is going down, which means the buying power of every single dollar that's out there is also going down. You just need more and more and more. Things would probably be fine in the short term, but in the long term, things are just going to get more expensive. Prices are just going to keep going up, and Americans just need more money. And it doesn't really help all of your bad assets that have started to grow on the New York Stock Exchange and in other markets. When you have a boom in your economy, well, investors tend to get kind of greedy. They look at a lot of these assets and they start investing in things that don't really have any business getting investor money. A lot of IPOs over the last 2 years have gotten investor money, and now they're probably going to go bankrupt because they really shouldn't have been a super big company to begin with. A lot of these IPOs that have launched are not profitable, and they don't plan on being profitable for a very long time, but they are some of the most valuable companies in our country because investors saw an opportunity to make a lot of money. At the end of the day, though, some of these companies and some of these assets out there are not good. They're fundamentally bad and they need to disappear. One of the ways to do that is through a recession. They simply won't survive because there isn't enough money and there isn't enough interest to continue to go in them. If this recession comes on, a lot of the businesses that survive are going to typically be strong companies with good fundamentals that continue to make a profit no matter what. If the Federal Reserve keeps printing money, then a lot of those companies continue to exist when they really shouldn't have existed in the first place. All of this fake money is being printed and all this easy money is going towards those businesses, and that really shouldn't be happening. That can make your economy very toxic, but this has been the approach from the Federal Reserve throughout United States history. It's what they did during the last crash of 2008, it's what they did in 2001, and it's what they did in the 90s. So a lot of experts have said, well, what's the difference today? Why would it matter today? And to be completely honest with you, it might help. We don't really know how it's going to affect the economy, but you can't continue to do the same thing forever. Think of it this way. You're not going to die if you do drugs one time, more than likely, but if you continue to do it over the span of your entire life, well, then you're gonna be in really bad shape. That is the exact situation with the Federal Reserve. Sure, if you do a lot of money printing one time, then you're probably going to be okay. But if this is your response to every single financial crisis, well, eventually your economy is going to collapse. That is what the Federal Reserve is trying to avoid right now, but many experts and investors have said that they cannot avoid this forever. The stock market and Americans are going to get fed up with all of this restrictive monetary policies, and they're going to want to see things come back down, and the Federal Reserve is going to have to give in. And keep an eye on if they do give in, because once we have reached a recession and once no demand is in our economy, well, that is a sign the Federal Reserve can finally let up. They can start to bring in some of that demand by printing more money and easing some of their interest rates. That can only happen though when inflation has reached around 2 to 3% again in our economy. It's gotta be that low, or else we're just going to create even bigger inflation and the problem is just going to get even worse. But now I want to hear from you on this issue. What do you think about the Federal Reserve's new plan to battle inflation and get our economy back on track in 2022? Do you think that so far the Federal Reserve has done done a great job with inflation and is doing whatever they can in order to lower it? Or do you think the Federal Reserve is not going to be able to lower inflation anytime soon, and we're going to need more stimulus and lower interest rates in 2023 and beyond? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.